Hi, it's Matt Simpson here from FOREX.com, and today I wanted to look at the Aussie dollar because you can see it is lower across the board during a risk-off environment. Now, the reason being is we can tie this back to the Kospi, which is the South Korean main index, and it had fallen, I think, 11%, just under by its daily close, had the worst gap lower in 4 months, and its daily range was at the upper standard deviation compared to the last 100 days. So quite a bearish day, and you can see it's not the first bearish day. In fact, it topped out multi-decade highs back in June. And when you look back at the movement from this low up to this high and look at the price action, how it's accelerating, I think we're just at that phase now where investors are selling quite simply because everyone else is. And you could also argue that going into these highs, it was potentially overbought anyway. So I think fundamentals aren't the main driver. We're at that stage where everything's going to fit a narrative to the story. Ultimately, prices going lower and investors are rushing for the exit. And that had a negative impact on Asia, and the Aussie dollar has been dragged lower because of it. Now, looking across the pairs here, if you had to pick a few out, depending on the style, Aussie CAD, it's oscillating sideways, but that range has got smaller. I think traders might be looking at mean reversion strategies within that range. Aussie Swiss is in a long-term uptrend and it's broken out, but it's debatable as to whether traders want to go chasing those moves. Perhaps a pullback might be more favourable to bulls at this point. But then we've got pairs like against the euro, where we've had a decent movement already. It's teasing some sort of consolidation or potentially reversal, something to monitor. Same against the British pound, it looks like it might want to pull back against. Aussie yen's interesting because it's got this decent movement higher towards 115, but it is trying to pull back. Ultimately, the yen's a very weak environment for that currency at the moment, and this has just scolded bears at every opportunity. And until the Ministry of Finance look at intervening, then there's a reasonable chance it might try and get up to 115. Aussie Q is interesting because you've got this potential swing high, so maybe there's a chance here for a bit of a dip lower, but we'll take a closer look at the Aussie dollar now. But I want to start off on the weekly futures positioning because it tells an interesting story. Aussie topped out in May, and it's obviously been moving lower since then, and you've had gross longs trending lower whilst gross shorts have been rising. But if you zoom in, we've had these 4 consecutive bullish weeks on the Aussie dollar and this shooting star candle, yet over this time, gross shorts were rising at the same time. So futures traders are fading against this move, and there is this reversal candle, so maybe we could be looking at a situation where we get a pullback. Keep in mind, of course, we do have CPI data for Australia tomorrow, and I've got a sneaky feeling that it might not be as hot as some expect, and that could see an unwind of some RBA hawkish bets, and that could potentially see the Aussie pullback. Another scenario, of course, is the FOMC meeting, where there's probably a decent case for them to lean towards the hawkish side, and that could be supportive of the US dollar. Now, what I find interesting about the daily chart on the Aussie is it's making really hard work of gains. This may well turn to be a bullish consolidation, but at the moment, every time it comes up to that 50-day average or around 70 cents, we get a bit of a pullback, and ultimately is trapped between the 200 and the 50-day average. So if we do get that softer CPI and that slightly hawkish Fed meeting, then maybe we'll get a bit of a pullback. Now, at the same time, the 200-day average is a bit of a hard level to crack, and we've got this bullish engulfing candle there just above 69 cents. But if I had to pick an assumption at the moment, I'm probably leaning towards a bit of a pullback ahead of a breakout in the coming weeks. Then when I look at the 4-hour chart, it gets interesting again. It almost looks like we've got this topping pattern coming with these lower highs, but for now, prices are holding above the monthly VWAP, that's volume weighted average price. You've got this slight bearish divergence on the RSI heading into these highs, and now the RSI is trending lower. So is that forecasting prices? We'll find out, of course. But with the monthly pivot point just below 70 cents, bears might be seeking to fade into moves towards this monthly pivot point in anticipation of a break lower and move towards that July VPOC. If we do get a proper risk-off environment, then perhaps moving towards 69 cents or these lows could be on the cards. As always, I hope that's useful. Wish you best of luck with your trading.